Welcome to the first Sound Money Matters live broadcast. I'm Daniel Diaz, your host with Citizens for Sound Money, and we have a great show tonight. We have an amazing guest, Jeremy Kauffman. He's going to be coming in. We're going to be talking about everything from the global economy, economics in general, the role of gold and silver in an economy, Bitcoin, and maybe we'll get into a little bit of Bitcoin versus gold and silver. We'll see. But just a little bit about Jeremy. He is a former U.S. Senate candidate for the Libertarian Party of New Hampshire. He was the founder of Library, a decentralized network I believe it was videos and also holding files. And he was also on the board of the Free State Project, which is a project that is near and dear to me because it was near and dear to our late founder, Jim Forsyth. The project of the Free State is to bring libertarians to New Hampshire to essentially create a libertarian haven. So without any further ado, I'd like to introduce y'all to Jeremy Kauffman.
Hey, Daniel. It's great to be here with you.
Yeah, likewise, Jeremy. And thanks for coming on the show, man. You're our first guest on Sound Money Matters Live. And as our tradition that our late founder started, we always ask our guests first and foremost, why is sound money important?
Well, sound money is important because money itself is important, right? Money is part of how civilization functions, how our economies function. If we can't save for the future, we don't have civilization. And if we don't have the ability to trade with each other, to write contracts with each other over time and this kind of thing, then we're not going to be able to produce prosperity. So good money is at the root. It's the sort of base layer of a functioning economy. And I'm a big fan of functioning economies and free trade and all these things that make civilization function.
Yeah, absolutely. And one thing that is really important to me, and part of the reason why I got into the sound money movement was liberty and freedom. And sound money, as Jim used to say, is that silver is freedom, gold is freedom. And even in the Bitcoin community, Bitcoin is freedom. So I think that money is, here's one thing. When I give my talks, I was at the Liberty Forum this past year, and I gave him my talk. I talked about economic energy. Where do we want to store our economic energy? Do we want to put it in real money that preserves our economic energy? We can transact with it, and it's not controlled by the government, or do we want to put it into fiat currency where it's a mechanism created for the theft of our economic energy, right? So sound money, hard assets, real money is about freedom. So before we continue on with our show, go ahead and tell our guests that don't know you about your background.
Well, you gave some of it. Formally, I have an education in physics and computer science, although probably the area I've spent the most time studying, without getting a degree is economics. So I'm a big fan of economics. I spent a lot of time as an entrepreneur, both with Library and Odyssey, which are projects that a lot of people in the sort of freedom communities are familiar with. These were apps used by tens of millions of people. I was also former executive director and board member of the Free State Project, which is part of the Free State movement, this idea to concentrate libertarians in one place, specifically the state of New Hampshire, where we're actually achieving political power. We have around 100 state reps in the state house here, and we're passing laws to make sure that gold and silver can be used as tender, and other laws to have a sounder economy and to have sounder economic principles in terms of how the government is involved with these things.
Yeah, awesome. And we have lobbied in New Hampshire the last couple of years trying to get gold and silver as legal tender. And I want to see if you know your legislature well enough. Do you know the one person who keeps stopping our legal tender legislation?
Oh gosh, I thought that one had actually gone through. I thought, isn't it effective? Like, didn't it already pass? There was like a bill last year that passed. Did it not get through the Senate?
Yeah, gold and silver as a strategic reserve, but gold and silver's legal tender has been stopped the last 2-3, actually every single year that it was brought up.
Well, I know it's not the Free State reps. I know Keith Ammon and Jason Osborne and some of the other people have introduced legislation to legalize this. So my guess is that it made it through the House and has died in the Senate. How am I doing?
No, it keeps dying in the House.
It keeps dying in the House.
The
Well,
chairman of the Commerce Committee,
okay.
John Hunt.
What's that gentleman's name? I'll put him on my enemies list.
John Hunt. He actually.
That's a shame. He's actually all right on some other issues.
He's good on a lot of issues, but when it comes to gold and silver, he is not a friend. He actually, so Jim Forsyth, when he went up there to lobby about 2 years ago, him and Representative Hunt and members of the committee went to lunch, and he was boasting and proud of the fact that he kills every single gold and silver piece of legislation that comes across his committee. And, technically it doesn't die. It just gets an unfavorable rating, because every single piece of legislation in New Hampshire, for those who are watching that don't know, in New Hampshire, one is the third largest legislative body in the world behind India and the US. And two, every single piece of legislation that is sponsored has to be heard on the House and Senate floor for a vote. But they bundle them up together as favorable and unfavorable, and you can take them out. But Representative Hunt, he's fantastic on a lot of issues. Don't get me wrong. I've talked to what is that organization? The New Hampshire Legislative
New Hampshire Liberty Alliance.
Liberty Alliance. He's the NHLA. They like him on a lot of things, but they don't like him on some specific things. So, and gold and silver was kind of a straw on their back that they were going to try to do something about it. But he's been there for 30 years, man. If there's an entrenched politician, it's this guy. So it's going to be hard.
That's how, fortunate. Often when revolutions happen, you kind of need the old guard to pass on. I think it's crazy because my view is everything should be allowed to be tender. Everything should be money, right? Like I think that's what we want. Is we want a free market for currency, in which I think silver and gold would certainly be competitive, and many people would use them. But the lesson to me is, when we have competition, we get better results. Government is often quite poor because it doesn't have any competition. If your government stinks, there's not really any ability to pick another one. Whereas you go out to a restaurant, there's hundreds, thousands of restaurants you can go to. You get treated very well, because if they don't treat you well, you're not going to come back. And so if we have competition in currency, the best currencies will rise to the top. If we don't have competition in currencies, then it's easy for there to be corruption and to have bad money and to have all these problems.
Yeah. Gresham's law, right? Was it bad money draws out good money? And right now there isn't really much free competition. You have the dollar, you have gold backs, you have some local scripts, but overall the government doesn't like other entities or other organizations creating new currency. Any government, right? They want to control the people. They want to control the means of commerce in every aspect. I think that's what drives us to be more libertarian leaning. I'm not a libertarian. I'm a fusionist. I'm a William F. Buckley fusionist, where I'm libertarian economically, but socially I'm more conservative. But essentially we agree on everything economically. And let's get into the meat of this broadcast about the current state of the global economy. You're an Austrian economist. You understand Mises and Hayek. Maybe give an overview for the audience of your perception of what's going on right now around the world. And I'm not going to even lead it on. I'm just going to let you go ahead and give a couple of thoughts.
Well, actually, I probably wouldn't consider myself an Austrian economist. But one idea that the Austrians did have, which I think was entirely correct, which is that inflation is actually a measure of inflation in the quantity of money. It's not just about the price level. And the U.S. government has continued to print very large amounts of money. It also continues to spend money that it doesn't have. And this has resulted in massive amounts of inflation in the way that people traditionally use the word, which is in the price level, So things are costing 20-30% more than they were just a handful of years ago. And this is something that I think everyone feels, but the subject matter is so complex that people don't really understand why. And this is part of the problem is to even understand why these things are happening. And this is what I think you're part of what makes inflation is not the largest tax, right? Like the largest tax is still, it's still your income taxes and your business taxes and all these other things. But it's kind of in some ways it's the most pernicious tax because it's such a secret, like no one knows that it's happening. Like things are getting more expensive all the time, and people don't really understand why. You see it in your paycheck, how much money went to Social Security and Medicare and income taxes and all of these things. But you don't. The inflation tax is this sort of secret thing, and so I think I like it when taxes are as blunt and in your face as possible, because then people will fight them more. Inflation, I think people is really hard to fight because it's this background kind of thing that people don't realize.
Yeah, no, it was purposely made, inflation, to be complicated. And as John Maynard Keynes said, not one man in a million could be able to detect the theft of the people's wealth through the printing of the currency. The entire global economy is every single major government follows Keynesian economics. I am hard pressed to find more than 5 universities around the world that teach Austrian economics. Every other school around the world is teaching Keynesian economics. The more extreme schools are teaching modern monetary theory. The Fabian Society, Fabian economics, which is really the precursor to Keynesian economics. I mean, what people don't understand was the entire system. John Maynard Keynes was a student of Lenin and Marx when it came to economics. I mean, he is quoted multiple times talking about how a central bank is great and how the Soviet Union is printing currency and controlling the economy and stealing the wealth of the people. It's something that is very prevalent within the founding of the Keynesian economic theory, because they think that the central planners can control supply and demand and the interest rates and the flow of currency, which is just what happens when we have centralized governments. They don't succeed. They oppress the people, and that's exactly what fiat currency is. And I think you're right, that gold and silver, or any system, right? Any monetary system that the people choose. And I think that's the important part. I think that's why Bitcoiners and gold and silver stackers, we get along, because the people chose gold and silver thousands of years ago as a meter of exchange, unit account, and store of value. And we, the people, also chose Bitcoin and other cryptocurrencies because we wanted to opt out of the current economic system. What do you think about that?
Yeah, so I will say that I think there are ways of storing your money in investment instruments and other things beyond currencies, but certainly when it comes to money that you're keeping in currencies, I think there are major problems with the dollar. I think it is a big problem that the types of economics that are being taught in universities. I will say that I think the Chicago school does get a lot right, and you have places like GMU, where we see sort of alternative economics being taught that would be probably closer to our views. I mean, to me, it does ultimately. To me, it comes down to competition, right? Competition is what we want. If I don't actually rule out, the idea that there could be privately managed currencies that could be competitive, but the key is that they would have to succeed in the market, right? And right now, the U.S. dollar does not have to succeed in the market. It is a coercive design that the U.S. government demands U.S. dollars from you, right? Like if you choose to get paid in gold or stock or any number of ways of you can get paid in pigs.
Yeah,
it doesn't matter. The U.S. government is going to say, well, I want U.S. dollars, and you're going and I want a lot of them based off of the work that you did, based off of the trades that you made, based off of all kinds of activities that you're doing. And so this is this is what actually backs the dollar, right? That what backs the dollar is the violence of the United States government. And I think this is a very very screwed up system. And so if we can get to a place of competition, let's have the Federal Reserve as much as I don't like the U.S. dollar, right? The Federal Reserve is actually better at managing their dollar than a lot of other
Oh
nations
yeah,
are, right?
for sure. Yeah.
Um, and so like let's have some robust competition.
Yeah, and the reason why they have been so successful in controlling the dollar itself better than other central banks is because we are the central reserve currency of the world right now. We're still the majority. Now that is changing. And about what is it? 6 days ago, an article came out on the Visual Capitalist. Let me go ahead and show that central banks now hold more gold than U.S. Treasuries. It's the first time since 1996 that the foreign central banks, if you add the U.S. central bank, it's going to obviously be U.S. Treasuries. But if you take the U.S. central bank out, the Fed, and just look at foreign central bank reserves, the gold is now more than U.S. Treasuries. And if you add the Federal Reserve back in, gold is now the second largest. It just surpassed the euro. And I mean, it's kind of telling that we're going back to a gold and a gold reserve. I mean, they elevated gold and at the Basel III accords to a class one asset, a liquid asset, right? So now the banks are holding gold and silver. I mean, the head of the Bank of England said that gold has been acting more as a currency than an asset last year, around the spring of last year. So gold has been skyrocketing, man. Gold is at I haven't looked at the spot prices as of this moment, but I'm pretty sure it's at like 41.30 or something like that. What do you think of gold and silver as currency?
I you know I think there was a reason that these things used to be used, and I think that if there was a free market, that these would continue to be used in greater degree that they are being used currently. I think it makes a lot of sense, that banks and nations are going to move away from the dollar, from holding dollars.
Yeah.
There's a sense in which, as a citizen, other nations holding my dollars is you can argue both sides of this one. To give the positive side of it, one of the positive sides is if inflation is a tax and a bunch of foreigners are holding dollars, then they're not getting taxed, right?
Yeah.
And I'd rather foreigners be taxed than me if we're going to be taxing people. But of course, the path that the United States is on is completely unsustainable. I believe U.S. debt is something like it's over 7 times tax revenue, right?
Oh yeah.
And even with with Trump coming in, who's supposed to be whatever, the most right-wing president in some time, we're still seeing more deficit spending. We're seeing we're not seeing this being fixed. And so I think if you're a foreign bank, or if you're really anyone, and you look at this, you go, well, like, do I want to hold a bunch of dollars? Where is this going to go? And I'm not really a collapser. I don't think everything is about to collapse, but I think something like a soft default, in which the United States inflates away this debt is certainly a fairly plausible course of action here, because we don't see the U.S. government able to cut entitlement spending. We don't see it able to balance the budget. And so how do you get out of this? I mean, 7 times, imagine if you were in debt 7 times your household income.
Yeah.
That is not an easy thing to get out of. And so, one of the ways that this happens is the United States inflates its currency supply, to a substantial degree, and that leaves U.S. dollars holding the bag. And so if you start to see that coming, well, then what are you going to do? You're going to move out of dollars.
Right. No, and it's called monetizing debt. I read an article maybe 2 months ago about Treasury Secretary Bissett, and an idea that was posited that they're going to shut down. This is just, I don't know where I read it. This was an idea out there that they're moving to shut down the Fed. The Genius Act was created and passed for private companies to absorb that debt. Once they cut the Fed out and abolish the Fed, they're going to print zero interest bonds, basically monetizing the debt, which is a really bad sign, because then there's no trust in the United States paying any of its interest. So they print this debt, or they create a gold bond, which has already been passed out there. They inflate it. They reevaluate the gold from $40 and I think 26 cents up to the current value, which is 41.50 or 41.60. I just saw. Then they use that new inflation to buy off the debt, and they're going to make it a 100-year bond, so they don't have to pay for any interest until the 100 years are up. So that's basically monetized debt. I mean, it's kind of crazy that they're coming up with these different ways to monetize debt, and when that happens, it's the end. It's the nail in the coffin of the fiat economy. So I don't really see there really isn't a tool in the shed anymore for the central banks. The GDP to debt ratio is too high. It's like almost 130% debt to GDP ratio. They can't cut. They can't increase interest rates to create a deflationary event because they don't like that. The stock market doesn't like that. It'll cause a global collapse. If they keep cutting interest rates, it's going to keep inflating the currency. There is no good solution right now for the central banks around the world to stop inflation or prevent a global economic collapse. I just don't see an option.
Well, right. I mean, there probably is a path out, but it would take a level of prudence that there's just doesn't appear to be any political appetite for. And I don't know if this is part of the dumbing down of America, or or we're in sort of late stage democracy. I believe the U.S. has hit. I don't know that we've ever been at quite this level. I think we've come close, during World War II and like other serious crises. But then, afterwards, either we tightened the belt or we had a big boom. I mean, I suppose maybe everyone in the White House is like praying that AI is going to save us. I will say this is. I'm not really a believer in this path, but like one of the things that would fix, hey, if all of a sudden we're getting 10% growth, real growth, not nominal growth, hey, that would fix it if we get some huge productivity boon or something like this.
Yeah.
But I don't personally, I wouldn't be betting on that. And this issue just gets, no attention. No political party is talking about it.
No.
The United States is spending 10% or more of its budget every year on interest payments, and any kind of sound fiscal thinking here would say, this is a top issue. We've got to fix this. We've got to do what it takes, whether that's cut entitlement spending or even raise tax. I'm not taxation theft. I don't want to raise taxes, but look, I'm not escaping the fact that I have to pay taxes. And right now I'm paying taxes and my country is continuing to accumulate even more debt. And debt, and this is the important thing. I love this. There's a great Milton Friedman clip, about that there's no cutting taxes without cutting spending, because if you're spending money that you don't have, you're just raising taxes on the future, right? It's either I pay that in my old age or my children pay it. Someone pays it, right? Someone pays it. And paying it in the sense of some sort of collapse, even a soft collapse, is actually worse than paying it, without that. I think, I think it kind of boggles my mind. I mean, it doesn't, because I kind of have low opinion of people at this point, but like, it kind of boggles my mind that this is not like talked about more, because it's like everyone should understand this. Like, people know how debt works, but of course, half of Americans have no savings and have massive credit card debt, and now we're running the country the way that these people live, and it's just alien thinking to me. You don't spend money that you don't have. Well, okay, in rare business cases, you spend money that you don't have, but like yeah. But generally, like, I'm not debt does have a purpose. You might go into debt to buy a house. You might go into debt to make business purchases. But we're going into debt to spend money on entitlements and the military and spend all this money, for just rudimentary expenses. And this is just no way. It's no way to run a household, and it's no way to run a country.
Yeah, no, 100%. So I just want to comment on something, then we can answer this question here from Alexander. He first asked, why is it versus? Why is Bitcoin gold and silver versus? Why can it stack? But I want to comment on something first. When we use a credit card, when we use debt, right? There's good debt and bad debt. And our job at Citizens for Sound Money and our nonprofit, the 501c3 Sound Money Movement, is to educate people of all generations on the necessity of sound money for a free society and a free economy to exist. That includes financial literacy. So when we borrow money and go into debt, there's a good way and a bad way to do it. If you're borrowing for consumer goods, for food, for buying a car, going into debt just to survive, that's bad debt. You don't want to do that, because if you don't have the income, or if you don't have a means to multiply that credit that you borrowed and put it towards a productive means to pay off that debt and make extra capital, that's the good debt. When you borrowed money or currency and put it towards a business or put it towards an investment that's going to increase what I call your economic energy, that is a good form of debt. But what you're doing, regardless if it's good or bad, you're borrowing your economic energy from the future. And that future economic energy is now being charged in interest. And if you cannot think of it as a road and you're digging a hole in the future and you're just moving along with the timeline. But if you keep digging and digging and digging, like the US government has, or people who have hundreds of thousands of dollars in credit card debt and they're paying 20, 30% interest, and it just keeps digging further and further as a self-perpetuating pit that you can't refill. So that's how debt works. You're borrowing your economic energy from the future and putting it today. And if you're not filling that hole back up with that capital plus interest, I mean, you're basically digging your own grave, because once you get to it, you're either going to have to declare bankruptcy, or if you're a government or a municipality or a county or some government entity, you default on your debt, which is not good. Which is not good at all. So I just wanted to make that quick comment so people understand why debt is bad and what type of debt that is, and then good debt. Now, answering, you have anything before we answer?
Well, just to segue into this question, and similarly in the opposite direction, when you save money, right now you have stored energy, right? And so this concept of money as energy, I think it's a really good analogy, and it has a bunch of parallels in physics and chemistry and other things. And so now you have all this stored potential, and how do you store it? So that it doesn't leak, so that it doesn't fritter away? What do you do with it so that you can use it in the future? And
yeah, exactly. And then when you're saving and you're earning interest, you're building, I guess, a ramp up to get to a higher plateau. Who knows?
as long as you're beating the rate of inflation, and this is where
yeah, and real inflation, not what the government's telling us. So why can't you stack silver and gold and have crypto? Well, I don't think we ever said that. I know the title says Bitcoin versus gold and silver. But what I believe, and Jeremy, you tell me if you agree or not, is that gold and silver go hand in hand with any investment. So let me put out there my beliefs, my theories on economics when it comes to money and everything else. There's only two forms of money: gold and silver. That's it. Nothing else is money. Full stop. It's been money for human history for 5,000 years. It has prevailed well for every empire that used sound money. And then what we find is throughout history, when they debase that currency, those empires fall. And anything else outside of gold and silver, the US dollar, the yen, the euro, cryptocurrency, stocks, bonds, any real estate, that is an investment or an asset that you put your economic energy into. Now, I like using economic energy because it becomes clear. Where do we store our economic energy? Well, I store my economic energy in gold and silver. It keeps up with inflation. It beats inflation. But when I want to increase my economic energy, multiply it, I invest it into a business or invest it into Bitcoin when it's on a low end. I don't think right now is the best time. And we can argue or disagree on that. I don't think right now is a good time to get into crypto. I think everything is overpriced. I think we're in an everything bubble. I think we're in a real estate bubble. I think we're in a crypto bubble. I think we're in a stock market bubble. We're in a debt bubble. That bubble is about to burst. And the
Yeah.
only safe haven is gold and silver. Thoughts?
So I will say, I mean, personally, I do think it makes sense to. I think equities have been one of the better investments in human history and have continued to do well over time.
Yeah.
One of the but I do think it makes sense, or certainly can be sound, to have some portion of your portfolio in harder assets. One of the benefits that gold and silver do have, as opposed to cryptocurrency, and quite frankly, I actually prefer equities to cryptocurrency, generally, not entirely. But one of the reasons that historically it's been good to put money into hard assets is they've been what's the word, like anti-correlated, is that the right term? Like when equities fall, gold tends to do well, or at least hold. And this has not been true of cryptocurrencies this far.
No.
Cryptocurrencies have mostly tracked the equities market, is my sort of understanding of that. And so I do think that is a potential advantage of the harder of gold and silver as opposed to cryptocurrency. But I think it's hard assets have a role in a portfolio. I also think people should be putting their money into businesses and productive enterprises. Oh, yeah. I wouldn't personally put all of my money into hard assets, but I think it makes sense for it to be part of a portfolio.
No, 100%. I agree with you. I think that equities, look, there's something that, you know who Mike Maloney is? Have you ever heard of Mike Maloney?
Yeah.
Yeah. So Mike Maloney did a series. It changed my life. It changed my world. It's called Hidden Secrets of Money. In, I think, episode, I want to say 3, he sits down with a bunch of British businessmen and he goes through his investment strategy. It's called wealth cycling. So he shows, if you bought gold or the stocks back in like 1910 and you held it, you'd have X amount of gain, right? Same thing with gold. But then he showed, what if you, when gold and silver not gold and silver, when the investments, the stock market got to the overbought ratio, what he does is he measures an ounce of gold and an ounce of silver against a specific asset, whether it's real estate, one share of the Dow Jones S&P 500. He compares 1 ounce to that asset. When that asset gets overbought and the ratio is high compared to its historical trend, what he said was, you sell that asset, you put it in the gold, wait for the asset ratio to get to the lower end, sell your gold, put in the asset, ride it up. That's called wealth cycling. You cycle out of your gold and silver, which is your wealth preserving asset. Then you put it in the stock market or real estate or whatever when that bubble pops, because we're in a boom and bust cycle because of the Federal Reserve. So when that market busts, you pull out and put it gold and silver to preserve it. When it gets low, you put it in, and you're now multiplying your economic energy. He did that example, and what you saw was it was like a 10 or 20x higher return if you did wealth cycling versus staying in equities the entire time, versus staying in real estate, versus staying in gold and silver alone. So I think that there is a strategy, and right now that's what I'm doing. Last year on August, when they cut the interest rates, I'm like, all right, we're in a problem. I sold all my Bitcoin, I sold all my equities, I put everything in the gold and silver. And it is one of the best decisions I've made. I studied Mike Maloney, I'm doing wealth cycling. Now I'm waiting to buy a house. I'm waiting to buy any more stocks or crypto until these bubbles pop. Once these bubbles pop, gold skyrockets, silver skyrockets. My economic energy is preserved as the inflation increases. Now I'm going to take it, put it in assets, and increase my economic energy.
I've always been more of a dollar cost averager, myself. I think there's, well, it's funny. I mean, I tend to believe in sort of the weak form of the efficient market, hypothesis, which is that there's a lot of smart people out there with a lot of money, and things generally tend to be priced in. At the same time, I mean, you do see these periodic cycles or dips or times that the market really tanks. The few times I've broken away from dollar cost averaging. I actually had a bunch of liquid assets when the COVID thing happened.
Mhm.
And I was like, oh, the equities are tanking. I'll buy equities. And I was like way early. It just kept tanking for like another like 3 weeks. And I didn't wait long enough, And so this is the kind of, it still worked out for me, overall. If I'd kept the money in cash or whatever it was in, it would have been worse. But, that's the problem. It's like, oh, well, so, hey, if you can call the top and you can call the bottom, then of course you're going to do tremendously for yourself. But you're up against, billion-dollar hedge funds. I mean, multi-billion, hundreds of billions of dollars, trillions of dollars. Like there's a lot of money circulating out there. There's a lot of people dedicate their lives to doing all this kind of thing. And so if you've practiced and you seem to be able to do it, I'm not going to tell anyone not to do it. I think the sort of sounder and safer thing is take the investments that you like, have a portfolio that includes equities and cryptocurrency and gold and silver and the assets that you like, and dollar cost average into them. And you don't have to look at the price every day, and you'll do well over time. I'm also one of those guys who's like, I don't like looking at my investments every day. I don't like having the psychological, yeah, sure, you'll feel good when it goes up, but how do you feel when it goes down? And I think actually, at least for me, I tend to feel more bad when it goes down than I do when it goes up. And so I have a happier life, just kind of set it and forget it. Don't pay that much attention to it, and be pleasantly surprised, when you check on it. Is sort of the way. But other people do it differently. That's not me. I'm not telling you to do what I do. And other people have also done better for themselves than I have. So, but that's been my strategy.
No, dollar cost averaging is one of the most powerful investment strategies out there. I dollar cost average every paycheck into ammo and into gold and silver, and that's what I'm doing right now, because I look, and when I say top and bottom, I mean the ratios, right? Like if you look at gold S&P 500 ratio, and you go back like 100 years, you start seeing a trend line of the peaks. So I'm not saying you time the top. You get out when you feels right, because when those peaks hit, it's only a matter of time. I got out a little early, a Bitcoin. I got out in August, but I still don't regret it, because my gold holdings are up almost 100%. Same thing with silver; it's over 100% over the year. So I'm doing fine. Yeah, I got out a little early. Might have made a little extra in Bitcoin before, when Trump got elected. I hopped in, hopped back out. But what I'm saying is, there are strategies to multiply your economic energy, and I save in gold and silver. I'm not always going to have everything in gold and silver like I am now, but but I do want to point out that we're in different times. Like there's something called the capital rotation event, and it's happened 3 major times. The first time was in 1929, where capital pulled out of the real estate and the stock market, went into gold and silver, and everything crashed. The second time was in 1971, a major capital rotation event, where we got off the gold and silver standard. Everybody got out of equities and pumped everything to gold and silver because of not knowing what was going on, the Vietnam War and the Cold War and everything. And now we're entering a third. There was a capital rotation event in 2008. It was a minor one. And now we're getting into a fourth one. And what that means is everything's over. Like I said, we're in an everything bubble. And I want to point out a couple of things. It's different now than the previous times, right? In 1929, it was a stock market bubble. In 1971, it was just a shock from getting off the gold standard, and it was a stock market bubble. 2008 was a real estate bubble that dragged the stock market down. Now it's an everything bubble. We're overpriced in real estate. We're overpriced in bonds. We're overpriced in the stock market, and everybody is fleeing to the traditional safe haven, and those safe haven assets are gold and silver. So much so that there is a silver shortage around the world. India has a holiday where they give silver out. They have stopped selling silver. Mutual funds are no longer taking any new funds for their gold and silver mutual funds. They are selling gold and silver at much higher premiums. How epic is this short squeeze? It is so bad that every single major mint on the planet, the Perth Mint on Australia, the Royal Canadian Mint in Canada, the Royal British Mint in the UK, the US Mint, they're out of American Silver Eagles. Every single mint is out of metal. And they are scrambling right now to refill the COMEX and LBMA bars. This is unprecedented. Historically, when we've had these type of shortages, it was always like a retail shortage. Never have the vaults that are the backbone of the central bank and the futures contracts have been out. It's never happened before. Now we're in a retail shortage, and we're also in a major bar, like a vaulting shortage as well.
So I'll be honest, this one's a little bit beyond my area of expertise. But I don't, if the whole audience is familiar with it, maybe it doesn't make sense to explain it to me. But I would love to learn like a little bit more about this, right? Because this is like the physical the claim here is like the physical inventories don't match or don't correlate with the amount that's actual being traded. But isn't a lot of the gold and silver trading just like a sort of, what's it called? Like a derivative? It's like
options contracts,
virtually tracking the price, right?
Correct.
Yeah.
Yeah. So the spot price that we look at is actually a 1 month contract for future delivery. So that is what spot price is based off of. And what's going on is you have derivatives. You have some good ETFs that are backed 1-to-1, right? You got the Sprott ETF. I think GLD is also backed by physical. But the problem is now you are also issuing options, and you are over leveraging these ETFs and these contracts, these options contracts. So on paper, if I buy an option, you have a contractual obligation, even if it's a 50x contract, to pay me that ETF that is backed 1-to-1 with gold. But they're over leveraged. On average, the gold and silver certificates, or we call them paper gold and paper silver, they are over leveraged 1 to 200 to 1. There isn't enough gold and silver. If everybody that had a contract, whether it was an actual ETF or an options contract, asked for delivery of that physical metal, there wouldn't be enough. And that's exactly what happened. That's exactly what happened.
Yeah, I mean, I get the concept of a squeeze. Squeezes have happened in other trading of derivatives, and I mean, this is examples of where you have hedge funds or investment funds, I mean, that literally look for these opportunities. I mean, you can find examples of these large banks, finding these opportunities where, oh, wow, this derivative is being, traded at 10x the quantities of the physical thing. If we buy up all of the physical thing, there'll be a squeeze. And because of course, a lot of times people just continue to trade the contract. The point, the contract, because they care about the price of the asset. They don't ever actually care about the physical gold or the physical silver. And so, I totally get the idea that there can be trading in excess. But in order, something's got to make the squeeze happen. And if that never happens, then it can go on forever,
Well, here's the squeeze. The squeeze is people are realizing that the inflation and the deficit spending and the printing of currency is not sustainable. Okay. People are flooding and buying gold and silver to protect themselves.
So we're game stocking gold, right? We're gonna do the game stock play on gold. Everyone's gonna get in.
Exactly. Well, it's because look, a study came out last year that 78% of Americans are living paycheck to paycheck with not $1,000 to their name, and they don't know why their paycheck last year isn't going as far as it is this year. And it's because of inflation. The simplest definition of inflation is the printing and expansion of the currency supply. And if you go to your Walmart account or your Amazon account about 5 years ago, and you look at an order you placed, and you replace that exact same order, you're going to find that the price is up 40 to 60% because real inflation is 10% compounded per year, around 10%, 11% now. So people are struggling. They don't know what's going on, but they understand that the dollar is not what it used to be. The world with BRICS, they're dumping the dollar. I mean, they're buying gold. They're buying silver. The central banks around the world have been buying gold and silver for decades now, or gold really. Now they're buying silver. And there's a major shortage because historically the central banks have used gold and silver for international trade amongst themselves. And now the retail markets, the options markets, there isn't enough. Like Warren Buffett bought $130 million worth of silver, and the COMEX could only deliver 90 million of it. They're slowly filling him up. The U.S. government bought the largest amount of silver back in May from the COMEX in the last 30, 40 years. And they're just emptying out these depositories overseas. There just isn't enough, and that's what's going on. And it's not just that there's not enough. It's not just a supply and demand issue. It's the fact that the federal governments around the world are printing currency into oblivion, paying for programs for war, the military industrial complex, and so forth. So, but we're coming to the end of the broadcast. Probably got another 5 minutes or so. Is there anything you want to comment on before we start wrapping things up?
Well, I will always work in my, New Hampshire plug. These are the kinds of conversations. If these are the kinds of conversations that people like, or you like, you being around people who understand these kinds of issues, New Hampshire is full of people who do, and not just citizens, but state representatives and other people. And so I'm not a doomer, but I am like kind of a soft collapser. I do think we're on an unsustainable trajectory, and that does mean that it will be more important than ever to be around people who understand these things, who share your values, who are prepared, who are capable, and more of them are concentrating in New Hampshire as part of this free state movement. And so, if you like this kind of thing, come like this conversation, like what I had to say. You owe yourself to come on a vacation to New Hampshire. Come check it out, meet some free staters, and get a taste of what's going on here in New Hampshire.
Absolutely. I would say New Hampshire is the second greatest state in the union behind Florida. We're about to vote to get rid of property taxes in the state of Florida.
As long as we agree that every person needs to leave New York and California and all these other places, that's fine. We can just agree
absolutely.
on that.
They need to leave the communist regions of the Northeast and the West and go to freedom in Florida and New Hampshire. We can agree on that. So before we close, I want to do a couple of things about Bitcoin and gold and silver. So this is Bitcoin price and gold and silver. This is that North Star bad charts are my favorite technical analysis traders. And what they do is they're measuring. Remember that ratio I told you about, gold and silver? This is a gold ratio. When Bitcoin gets near to that top, you want to sell out, and then you want to get in the bottom, right? So this is what they're saying, that that Bitcoin, when measured against gold, it's now getting into a bearish circle. Now, we know the 4-year cycle with Bitcoin. This is Bitcoin against silver. Same thing. We're starting to see this is a long-term support, major resistance. And when you price Bitcoin against gold and silver, we're starting to see a bearish turn. Against the dollar, it's different. The dollar is losing inflation, and they're printing into oblivion. You got Tether and everything. But when you're actually using that method that Mike Maloney said, when you're using gold and silver as a central monetary unit, which you measure every other asset against and you wealth cycling, we're starting to see a bearish trend. Now, this right here is Bitcoin and the dollar. And as we see, the 39x, 16x, 3.5x, 1.5x, it is the momentum is declining. We can see that in the TSI as well. So I don't know. I think we're about to see Bitcoin, instead of going into a boom cycle, I think we're going to see it go through a bear cycle with everything else. I think the everything bubble also includes cryptocurrency. So that is the last thing I want to say. We got about 2 minutes left. Any comments about that analysis?
I'm like the opposite of a charts guy. But I don't want to take away other people's fun, So
yeah. All right, cool. Sounds good. All right, man. Well, thank you so much for coming out and being our first guest on Sound Money Matters Live. We'd love to have you on again. And when next time I'm in New Hampshire, let's grab a beer and let's chalk it up.
For sure. It's great talking to you, Daniel.
Likewise. Thank you for coming out. All right, everybody. Thank you for coming and watching our first live episode of Sound Money Matters. We're going to do this every week. The goal is to have a Sound Money Matters live event on Tuesdays around 6 p.m. every week. And then we have a live broadcast on not a live broadcast, a recorded broadcast on every Friday. We're going to premiere. We just interviewed David Morgan. He is coming out with a brand new documentary called Silver Sunrise. We have a sneak peek of that documentary. Come and watch on Friday at 7 p.m. is when we're going to premiere that. And we'll also be promoting the Silver Sunrise premiere, which will be on October 22nd. October 22nd. So if you support what we're doing at Cities for Sound Money, the Sound Money movement, where we lobby to make gold and silver legal tender, we promote the use of sound money, we educate people on how to use gold and silver in their daily lives and educate them on sound money principles and financial literacy. Please go and visit our website. Let me go ahead and throw that up here, Citizens for Sound Money. You can find more information and resources. This is a promo video about what we have done over the last few years. This is our late founder, Jim Forsyth, and you can learn more about our coalition partners and what we're doing internationally, because we're an international organization. And if you want to support our 501c3 foundation, championing financial education for sound money, sound economy and prosperity, you can go to soundmoneymovement.org and support us. It is important that we educate people on economics, on sound money principles, because gold and silver are freedom. So thank you so much, everybody, for watching the broadcast. Go ahead and visit our website. Support us. You are a part of the Sound Money movement if you believe in gold and silver as money and that gold and silver is freedom. We want you to join the movement. Soundmoneymovement.org for the C3 and Citizens for Sound Money. Become a pioneer member. It's only $25 a year to join, and you will become a pioneer in the sound money movement. Thank you, everybody. God bless, and have a great evening.